Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions and any questions you might have about your subscription, what to expect in the market, short-term, long-term, key support and resistance levels, and will the volatility continue or will it drop? For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. This is my brief bio. Disclosures are very important. I'm going to go through specific trade ideas. It's very important to just look at the disclosures. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account, based on my own risk tolerance level for general education information purposes only. All right, let's take a look at the market. Switch to one day. So kind of have a mixture of results from the earnings, right? On some technology stocks like IBM and Netflix have dropped significantly, right? And Meta. And today, Google, Microsoft, and to some extent, Microsoft kind of saved the day, right? Because we had a pattern of bad earnings from technology, Netflix, Meta, IBM, and now we have Texas Instruments is better than expected, Google is better than expected, and Microsoft is probably in line. Hasn't really posted a new signal, still trading below 50-day moving average, but at least Google making all-time highs, right? Making new all-time highs and very strong move on the demand for the AI and their revenue from their cloud computing and from the YouTube subscriptions and from the search. So Google saved the day. Intel is down 11%. And for the most part, I think earnings are still coming in better than expected. So that's earnings, and probably right now, people pay attention to earnings probably just as much as to the treasury market and interest rates. Interest rates, PC data, I think it came in a little bit harder than expected, a little bit higher than expected year over year, in line months over months, but better than I think most people were feared. And for now, there are no new signal in the 10-year yield in the treasury. It's still elevated. It's above 4.5, but there is no new signal. Yesterday, we were as high as 473, so we briefly broke above 470, which I think was a key overhead resistance, and it's pulling back right now. And as a result, you can see market is rebounding on Google earnings. So then the next question is Fed decision, right? We had 3 months in a row where the inflation came in a little bit harder than expected. And now everybody's questioning whether there will be rate cuts or there will not be rate cuts this year. Some people actually proposing that there will be rate hikes instead of rate cuts. So I think the most important data point is going to be Powell's FOMC interest rate decision and Powell's speech next week. For now, interest rates are elevated, right? So if they don't drop after his speech, I assume volatility will pick up. We're either going to drop to 450 because he's going to sound more dovish and say that interest rates cuts are still on the table. If he sounds more hawkish, that he's not sure whether there will or will not be interest rate cuts, I think interest rates could jump to 5%, or at least break above now 474, and that would be a bearish signal. So I think from that point, the risk is still on. So earnings are coming in, some better than expected, some worse than expected, but for the most part, I think they're in line. And market is oversold, but the Powell's reaction to the interest rate, I think, is important. And then after that, we do have next batch of CPI and PPI data. which is going to be in May. Well, that's going to come in the following week. All right. So in terms of interest rate, there are no new there's no new signals in interest rates. US dollar continues to be elevated. That's also bearish for the market. Japanese yen continues to drop precipitously. Right, that's another area of concern that at some point, as yen falls apart and historical lows, Bank of Japan will intervene. And if they intervene, that could create instability or dislocations in interest rate market and currency, and that will translate into equity as well. So I would keep a Japanese yen. It continues to fall. That's probably pretty well covered in the market. Treasury yield yesterday, same thing. There was treasury auctions. They came in at 471. Also weren't great. A lot of chatter about that. So let's look at spiders. We spent a few weeks below 50-day moving average. We're approaching this line in a sense, right? I was talking about ABC pattern. Looks like we have ABC, and now with Google earnings, probably B is not over yet. Right? I thought that we started C, but obviously Google saved the day. So I still think we are in the A, B, and then the question is it a V-shaped recovery, right? Because we do have Apple and Amazon earnings, or do we have, is it a V-shaped recovery, or we go lower? C. Okay. Is there ABC pattern? Somebody actually said, Vlad, what is this gibberish ABC? ABC patterns, I don't think it's gibberish, but it's it's a well-documented technical price pattern. Right? So especially if you follow Elliott waves or wave theory in general, stock forecast toolbox, our neural networks are built on waves, mathematics that isolate waves and filters noise in waves. So it's a well-documented mathematical formulas and chart patterns, and I would pay attention to that. Okay, so how many of you think we're going to have a V-shaped recovery and market is going higher? And how much? And how many things that we're going to have wave C? So scenario one, we're going back. I think at least for now, right? I mean, earnings season next week is probably going to come to like where 80% of companies will report earnings. 80% of S&P 500 companies will report earnings by next Friday. And then I'm not sure what the catalyst would be. So I think the top is set. The top is set at least probably till next earnings cycle, which would be July. Right? So the top is set, but we could get to at least revisit the top, right? That's scenario number one, like a V-shaped rebound. Or scenario number two, we're going to take out the lows and hit the 480. Okay, so that's scenario number two. So 20 points to the upside and maybe 30 points to the downside at this point. Joseph, earnings versus guidance. Yeah, I mean, definitely, I think Netflix and Meta did not have bad earnings. I think they beat on the bottom line, they beat on the top line. Maybe the guidance came in a little bit worse than expected, I agree, on Netflix and on Meta. But again, it depends on the expectations. And if the expectations are very high, anything you say negative during earnings call, then you have sharp pullback. Thank you. Okay, so Joseph 2, Mark 1. All right, thank you for participating. Really appreciate your time. Alon, DJ, Don, Joseph, Kevin, Mark, Patrick, Peter, Raul, Rob, T, Michael, Steve, Peter, Martin, Peter, 1. Okay, so most people say 1. We're going kind of a V-shaped recovery. I'm going to take a contrarian view. I still think there's enough damage has been done, and earnings season doesn't seem to be saving the day. I mean, market is oversold, 5% pullback is pretty sharp. It looks like we're following the October, September and October playbook. So I'm going to go with 2. I think this is, we might get to 50-day moving average. We might even get a little bit higher, right? But I don't think we're going to break this level, 515, 516. And there's only 1 week left. Obviously, the risk, I mean, I could be wrong. And I would say the unknown is Powell's decision. Right? I'm going to make an assumption that he's not going to say anything neutral. He'll basically say, I have no idea whether we're going to cut interest rates or not, and and I think for that reason, market will pull back. But if he's going to say that the rate cuts are still possible, and inflation is kind of still trending and going in the right direction based on PCE data latest, then we could have rates drop significantly and market continue to rally. But I don't think that's the core scenario. I think the core scenario is scenario number 2. I would just pay attention to his speech and earnings. October playbook, 10% pullback. Yeah, so if you follow the October playbook, it was very similar, right? We had earnings season that started, I mean, seasonality is a little bit different, right? So in 2023, when we reached the peak of the market is July, right? When the earnings season started, right? Earnings season started July 15. By July 25, when Google, in 2 weeks, 3 weeks, when Google and Microsoft announced earnings in July, after that there was no positive catalyst, and same idea, fear that there will be no interest rate cuts in 23. But then the market started to pull back as the earnings season kind of came to an end. There was nothing else. It did rebound, recovered 62%. We recovered 62% in September, and then we have another, wave A, wave B, wave C, D, E, right? So we have this A, B, C, D, E pattern. The only difference that I can think of is that from seasonality point of view, September, October are probably the worst months, where April and May are, probably one of the better months or the best months, in addition to November, December. But seasonality doesn't always work. Right? Seasonality is just, observation. It happens more often than not, but it doesn't mean that that's what's going to happen. So I still think the playbook is what we're, September, October of last year. Unless inflation data, right? In May, inflation could drop significantly, and then, then we'll have V-shaped recovery. But assuming that inflation is not, or if inflation in May is also going to come in higher than expected, then definitely it's September, October playbook. Okay. Thank you, Joseph, Patrick, Peter, for participating. All right. In terms of what stands, let's look at other Bitcoin. Right? That's a proxy for risk taking. Bitcoin is kind of navigating the 50-day moving average, not the strongest price pattern. Consolidating, I would watch 60,000. Right? We've been walking around 50-day moving average. So I would still think that's kind of a negative price pattern. NVIDIA is extremely volatile. It pierced through 50-day moving average, spent a couple of weeks below that, and now it's trading above 50-day moving average. Crude oil, it looks like 80 is a new support level, strong support level. This is a 50-day, 200-day moving average. I think crude oil Can continue going higher. Let's see how's the FXI. Looks like FXI finally catching a bit and continue to grind higher. Let's look at 1 week chart. Let's see if there's any new signal. So definitely, I would pay attention to China. Right? It's consolidated in the drop, consolidated for a couple of months, and now this week strong move to the upside. How's Bob's favorite JD doing? Right, and you can see JD is also trying to break out. So if there's a follow through next week, then it looks like FXI is catching a bit. XLK recovered probably more than half of the losses from last week. Metals and miners continue to deteriorate. Oil, XLP, looks like recovered more than half of the losses from last week. Regional banks are sideways, but better than expected. Right? Earnings were not as bad as people feared. Small caps recovered basically all of the losses from last week, or most of the losses from last week. Spiders recovered maybe 2/3 of the losses from last week. Semiconductors are recovered most of the losses from last week, and QQQ recovered maybe 2/3 of the losses from last week. So definitely kind of a snapback recovery compared to last week. Questions? All right, let's see. So in terms of some of the trades from this week, let's review them. So if you're new to TradeSpoon, I encourage you to try Elite Circle, right? We have a subscription divided into 2 categories. One is where you can follow my portfolio, you can enter your phone, you get SMS messages, you can participate in live trading room. It just depends how much information you want to have. If you want to see all of my trades, then Elite Circle. If you want to see stock trades, Robo Investor. If you want to see directional premium, the directional spread trades, then it's a premium or spread portfolio. So that's one category or one bucket of the subscription where you're following my trades. If you want our AI tools, then we have a tools subscription where you get access to Stock Forecast Toolbox. I use it all the time. You can see Stock Forecast Toolbox for today. Let's just make sure it's updated. Predicted 504. Actually, turning bullish signal to slightly bullish momentum. It was negative. 505 overhead resistance 498. It still doesn't see a lot of momentum beyond 511 level. So obviously on Google earnings we have a rally, but at least for now I do not see a lot of momentum above 512 level. So I agree with the model. And you can zoom out to 6 months. Now you can zoom out to 6 months predictions. Basically says that potentially we can get to 540, right? It's a V-shaped recovery. We break overhead resistance, maybe not in April, but in May. We could get to 543, on the downside 480. A neutral trend. So it looks like we're consolidating, the top is set, we just range bound between 480 and potentially 540. So that's Stock Forecast Toolbox, neural networks based on this isolation, spectral filtration of waves, neural networks. It learns, trains on the data, and has an inference engine making signals. Then similar models to provide, well, which stocks can outperform the market. So if you're looking for signals, right, everyday active trader, if you're short-term, medium-term trader, then I would encourage you to try active trader. Every day we provide you with stock and option ideas. You can do stock, or you can select options. If you're looking for leverage, and there are three bullish, three bearish ideas. So today, General Electric, the model continuing to signal that General Electric had a strong earnings, they're outperforming, and signal in general. Signal Texas Instrument had strong earnings, picked up Texas Instruments and Energy, Southwest Energy. So you have examples of some of the semiconductors leading, some not all industrials, right? Some Caterpillar did not have a strong earnings. But you have three bullish, three bearish ideas. I encourage you to use, if you watch live trading room, I use dollar cost average. So for short-term signal, I'm looking for 1% gain, 1% stop loss, and I divide the trade into two with the idea that I don't want to risk more than 2.5% of account value per trade. If you do day trading, then it should be less than 1%. If you hold a position overnight, less than 2.5%. That should be, that's kind of average, right? If you ask 100 traders, how much are they risking on day trading, they'll probably tell you less than 1%. If you ask, medium term or traders that's holding position for a couple of days, couple of weeks, they'll tell you, based on their account size, but somewhere less than 2.5%. So for that reason, I would break the trade into two and look for 1% gain, 1% stop loss. And same thing, we have weekly trader. Every week, you get three bullish, three bearish idea. This week, model runs on Sunday and gave you, Citigroup. So it looks like banks have a, this was posted on Sunday, and identify Citigroup. Citigroup is an uptrend. Here you're looking, because you're holding, this is a weekly model, you could hold anywhere from 1 to 2 to 3 weeks. Then you widen your target gain stop loss, 2.5%. And if you do weekly trader, monthly trader, then it's 5%. But same idea, you have entry 1, entry 2, you're looking for 2.5% target gain, 2.5% stop loss. And it's all about risk management. I propose if you're new to trading, maybe 4 active positions and 2.5% of account value per position. Any questions on the tools? Joseph, how's gold looking? I think gold is consolidating. Right, we had a pullback in gold, but still above the breakout level, very strong. Silver pulled back a little bit more than gold, but still above breakout level. So I think gold and silver looks very strong. Gold miners are actually doing better than gold. They are, they are lagging, right? They still didn't break out 2023 high, but so I think as long as the inflation is here to stay and better than expected prints, then gold and silver should continue to rally. So personally, I'm long gold. I think this is just a period of consolidation. Obviously, it's volatile. We were at 36 and we were at 32 in the past couple of weeks, which is 10 to 15% price fluctuation of gold miners, similar silver. So expect more volatility, but it's consolidating, and personally, I'm long gold and silver in my account. Thank you, Joseph. Any other question? All right, so we talked about, let's see, the battery. 20%. Give me 1 second to get my charger so I don't lose that. Yeah. Sorry about that. Okay. Questions? Missed the beginning. Was this recorded? Yes, it is recorded, and you should get an email with recordings. All of our recordings are posted. So live training room recorded here, but strategy roundtable is event recordings. So you go to event recordings. I encourage you to view trading room. Everything takes time, right? You want to internalize the information. So the way to do it is, repetition. And all of our events recorded. So I encourage you to go to Strategy Roundtable on the live event recordings and view the recordings, right, from the past. Same thing, we give you access to trading room recordings, right? So you can kind of get familiar how I use Active Trader, how do I use weekly trader, monthly trader, how do I trade spreads, how do I trade earnings. So all of that you can find here. We do have an active investor workshop. Somebody asked, how do you trade MACD, I think. So you would see we have different, Greeks. You can search for different webinars and you'll find topics, right? Technical analysis. Right, we have fundamental analysis, we have technical analysis, and you can find different webinars, different education. We have Getting Started guide, there's a learning center where we have a training wall for all the different videos. We have workshop recordings, we have trading guides. And all of that information you can find under education. We have a YouTube channel where you can actually, for those of you who are on YouTube, welcome. Please, if you like the content, please subscribe and share. Hit the like button, but please subscribe to our channel. Thank you for participating on the YouTube channel. What else? So that's the educational side. We have the tools and services that we just went over, and some of the other tools, research. Right? We can talk about research, seasonal charts. So we have, in terms of seasonality, we show seasonality. Right now, it's getting higher correlation to the seasonality part, and probability calculator. In terms of, basically says what's the probability, 76% probability we're going to trade between 510 and 496 right now. Right, so that's the probability calculator. Any other questions? Thank you. All right, some more other people are joining. Let's see, any other questions? So in terms of trades, let's review some of the recent trades and just see so you can get an understanding of some of the trading. All right, so I trade merit puts or just puts in general. XLF, I still think there's another wave C coming, so I do hedge. So this is an example of, I have an open order to close May 40 put on XLF. XLF probably retrace maybe half of the gains, maybe even more than half, 60% of the gains in terms of retracement. So wave A, wave B, is there wave C? I think The answer is yes. So I'm still waiting for a pullback. Also, Spider's put. I did a put spread, so now I have a long leg left of the Spider's put spread. Put. I do earnings, so you do have kind of a. This is an example of a calendar spread where I sold. Procter & Gamble announced earnings last week. I sold 165 call from last Friday that expired worthless, and I bought 165 call for this week. And that just give me 1 second. One second. Sorry about that. Okay, so yeah, so this was an example of calendar spread. So I do a lot of earnings. Let's see what other trades we did. So Procter & Gamble, this is an example where I try to look for asymmetrical returns, right? So sometimes you want to be long volatility, sometimes you want to be short volatility, right? Market earnings has been very volatile for the past 3 earnings, and they continue to be volatile. Case in point, Google today, Google doesn't move more than 10%, right? That's 2 standard deviation. At some point, Google was 180, right? It was up 15%. Same thing, Intel. Intel is now 10%. That's 2 standard deviation move. Intel usually does not move more than 10%. So almost every day there are earnings or Meta, right? Meta, yesterday, Meta at some point was at $400 stock, right? 400. So it moved from 480 to 400 very quickly. So earnings volatility is extremely high, right? And but sometimes based on positioning and based on the flow, right? If you look at the recordings from live trading room, I look at the positioning, I look at the open interest, at which strikes you have an open interest, and then I looked volatility. You know, is there a call skew or is there a put skew? And if I see a lot of call skew where people buying calls or selling puts, you know, then sometimes I want to be long volatility, right? I think Tesla was a good example of the earnings that we did. Tesla. So try to defend the stock, but I did put a debit spread, right? I bought 120, 115 debit spread. I want to be long volatility. So spend 54 cents and close it for, and it's still 54 cents. So that would be an example of where I would be long volatility. Let's see, so we talked about Procter & Gamble. AT&T is another earnings strategy. General Motors I traded. And I trade stocks, NVO, right? I'm long NVO. So you can see all of my orders and positions that I do. Either you access the website, go to orders and positions, or you go to a trade log and actually can see live trades. So that's where I would start if you want to see my trades and learn and participate in live trading. Right? Because I do macroeconomic macro analysis. There's always pre-market session where I talk about key support and resistance levels. I look at the position. A lot of people look for that information in terms of support, resistance, where I think the market is heading, any pre-market news. And then kind of a top to bottom approach. I look at the active trader, weekly trader, and execute some of these signals. Any questions? Alon, BJ, Don, Joseph, Kevin, Mark, Martin, Michael, Patrick, Peter, Raul, Rob. All right, so let's then maybe just go through, sum up some of the signals, if there's any new signals this week. Materials, still pretty bearish pattern, but nonetheless green candlestick, that's bullish, but lower highs, lower lows in materials. Home builders, looks like 3 weeks of downward movement, and now we have a rebound, wave B. So it looks like at this point 100 is your key where you're line in the sand. Metals and miners, green candlestick, but pattern of lower highs, lower lows. We talked about China, strong rebound, FXI. Industrials, similar pattern. Right? We have General Electric had a strong earnings, but then Caterpillar had weaker earnings. Those Caterpillar actually. Yeah, so Caterpillar didn't have good earnings, so you have 3 weeks of this downward movement. NXLI is 120. Right? It looks like 120 maybe recovered half of its losses. Dollar consolidated is not making any new signals. It's facing this overhead resistance around 107. And it's unable to break through that level for now, so that's bullish. Junk bonds had a strong sell-off, hit 200-day moving average, key support around 92.47, and looks like strong rebound, getting close to maybe retracing half of the losses. Healthcare has been weak, right? So kind of still a weak rebound in XLV, but looks like it found support in this 12 months breakout from the 2022. So it's at least for now consolidating. Consumer discretionary recovered most of the losses from last week. The retail sector has recovered actually all of the losses from last week and bouncing back. They sold off the most, did break through this 2023 high to the downside. Transportation has been weak. Right? So transportation, your railroad companies, UPS, FedEx, pretty weak rebound, actually in lower high, lower low, and now 4 candlesticks, and looks like we're trading below 2023 high. That's another proxy for economy. Right? You look at the semiconductors and you look at the transportation. Let's see, TQQ recovered 75% of its losses. Semiconductors recovered 75% of losses from last week. And let's see, Spider, similar price pattern. Consumer staples recovered most of the losses from last 3 weeks, actually almost closed the gap. So people are gravitating towards safety asset classes. XLF recovered half of its losses, and the ARC Innovation recovered half of the losses from last week. Airlines have been strong. They recovered most of the losses in the past couple of weeks, and IWM still recovered most of the losses from last week, right? Green candlestick, but still trading below this breakout level. of 2023 high. So it's the 200 is the key level for IWM. XLE is weak today. There was XLP, silver pulling back, LA Lilly. Looks like stabilizing, and okay, so all right. Any other questions? Oil, I'm still bullish on oil. I'm bullish on oil as long as it's above 80. So looking at the crude oil, I do have a position in oil. I'm long. This week, actually, it recovered probably half of the losses. It's not going anywhere for the past few weeks. It's trading between 88 and 80. But the 80 level was a breakout, and you do have a cross of 50-day and 200-day moving average. Right? And you still have this kind of a strong uptrend. So you above 50 cross 200, it's above trading above this uptrend, long-term uptrend since last year. So as long as we're trading above 200-day moving average, I would say we're probably going to at least revisit 88. And if inflation comes in harder than expected, then it could be that the oil, especially with geopolitical risk, I think I'm personally bullish on oil. Possible play long, Mark, AMD. Well, AMD hasn't announced earnings yet. So, I mean, it could be like Taiwan Semiconductors, right? It could be like TSM earnings, which were not good. Actually recovered all the losses from earnings. Or it could be like Texas Instrument. So, I don't know how AMD is going to announce earnings. I mean, they are benefiting from the AI. I think expectation is probably relatively low because it did sell off. So if they beat on the bottom line and they beat on the top line, I mean, it did have a precipitous sell-off. So if they beat on the top line and the bottom line and give forward guidance and the bar is set low, I think they could bounce. Right? I mean, at this point, anything they say positive, they'll probably bounce, just like Tesla. And Tesla earnings were dismal, but they gave forward guidance that they're going to produce more cars, cheaper cars, and earlier than everybody anticipated, and Tesla had a strong rebound. So AMD could be the same way, but again, they do have to say something positive. If everything is negative, then probably. But I think if risk versus reward, I think you have more upside than downside. And I would, most of the time, the 100-day moving average holds. Thank you, Mark. All right, any other questions? All right, if there's no other questions, thank you very much for participating. Alon, BJ, Don, Joseph, Kevin, Mark, Martin, Patrick, Peter, Raul, Rob, everybody on the YouTube channel, thank you very much. Please subscribe to our channel. We have live training room on Wednesday, broadcasted, so you can watch it on YouTube. for now, that's all I have for today. Thank you very much, and have a great weekend. And there will be a closing bell, so for those of you who are participating in closing bell, please join me at 2 p.m. Central, 3 p.m. Eastern. Thank you very much, and have a great day.